Hi everybody, my name is Kevin Berju from the Berju team in Centennial Lending Group. Our purpose for this video today is to give you some of the do's and don'ts when applying for a mortgage. Applying for a mortgage is not something you do every day, so we thought we'd give you some tips on things to avoid when doing this. So one of the first things is if you have an income change during the course of your pre-approval or while you've applied for the formal mortgage, please let your mortgage consultant know as soon as possible. This could affect your chance of home ownership, and the more we know up front, the better we can figure out how to get you to that goal. A second thing is to keep documentation of all large deposits. So if you have an abnormally large deposit, something that you don't always see in your day-to-day finances when we look at your bank statement, that's going to come into question from an underwriter. What you would have to do is write a documentation piece on why that is and provide backup documentation for that. I'll give you an example. So suppose you were selling your car and you were getting $10,000 for your car, which would be in most cases an unusually large deposit. What we need you to do is get documentation of the sale of the car. That would be the ownership that you have now of the car, the bill of sale, which you have to do at the notary when you go to sell the car, and those numbers should both reflect the value of the car, the value you have received for the car. So we can't see that you sold the car for $5,000 and then see a large deposit of $10,000 into your account. They do have to match. You should also avoid applying for new credit. Now, I know that may be difficult because when you're buying a home, who would think that you might need furniture and appliances and things of that nature? However, if you have any new credit, it will be called into question, as usually within 10 to 3 days prior to settlement, they will do a soft pull on your credit to see if you've applied for any new credit. So, if you do, and it's something that you need to, and you establish credit, and you've spoken to your mortgage consultant ahead of time, and it's still well within the realm of your approvability, then please feel free to go and do so. But please consult your mortgage consultant ahead of time. It's always a good idea to do that. If you have any big change in your credit, please let your mortgage consultant know. We cannot fix things that we don't know and they come up 3 days before settlement. It gives us very little time to help you get to settlement. And if you're going to consolidate your debt, please do that within a plan that your mortgage consultant has spoken to you with. That should be about. And if you're going to consolidate your debt, please talk to your mortgage consultant ahead of time, so that they can tell you the best way to do that, what to pay off, and maybe not what not to pay off. And overall, it's not usually a good idea to quit or change jobs. Now, sometimes that has happened. We have had it happen many times. So maybe you're going to a job that gives you more income. There are some requirements when you change jobs during the process, so let us know if that's going to happen ahead of time, and we can guide you through that. So again, just some helpful do's and don'ts. If you ever have questions or are unsure of what the course of action is or the best thing to do, please just contact us. We can lead you and guide you through that maze. Thank you very much.